Hello everyone. Welcome to FiSC Capital. You would have heard of NISM Investor Awareness Program. This program is basically designed for Indian retail investor to get more educated about Indian securities market and investments. As you are aware that such programs take a lot of time and they has a lot of documentation to read, many people find it too lengthy and difficult to understand what the program actually wants to tell. So we have realized that this has been issue with almost every investor, that they find themselves not having enough time to go through a lot of lengthy documents and courses to understand, and therefore we have tried to make some basic courses of investments for our viewers. So in this chain of events, the first course we have created is FiSC Capital Investor Awareness Program. This is closely designed by considering the core idea of NISM Investor Awareness Program in tech, and then give you more practical examples throughout the journey. Are you tired of losing money in stock market? Buying at the top, selling at the bottom, following random tips and losing money? Well, stock market looks very easy, but smart investments require experience, strategy and discipline. At FiSC Capital, we help you invest in the right. We provide research-backed recommendations, tried and tested strategies, and personalized investment plans. From small investors to big investors, from retail to HNI, all our clients trust us with all their investments. So the question is, are you going to rely on the guesswork, or are you ready to start investing with expertise? Contact FiSC Capital at the below given number and start your investment journey now. So in the first chapter, we are talking about why financial literacy matters. If you are financially literate, if you understand the financial concept, stock market, mutual funds and all these things, at least at the basic level, these are the four key things which you will get from financial literacy. So first of all, there is no structured financial planning in Indians. Most of us randomly, without any financial roadmap, make decisions of our investments, savings and consumption. So if you are financially literate, you may get a better understanding of how to plan your finances, how to go and invest, how to go and save, how to go and consume. Then second part is, you may be aware that a lot of Ponzi schemes and frauds are there in this country, and this happens because of lack of awareness, lack of financial literacy. So if you are financially literate, you can easily determine and identify which is fraud and which is right for you. So that's why this matters. The third important aspect to understand financial literacy is the concept of inflation and saving. So we all understand that inflation is a thing which can eat your savings, which can destroy your saving. When we look at the prices of goods, when we look at the prices of our daily needs, basic needs, and even our big investments like real estate and gold, etc., we realize that every year the prices are increasing. So if we just save the money in our bank account or at a place where the money is not growing fast enough, then the value of that money in the next coming years is only going to deteriorate. And therefore, it's better to not keep idle money, but where to invest, how to invest, all those things require financial literacy. Otherwise, you may end up destroying the money even faster than inflation. And last part is that if we know we are financially literate, we may start investing based on our life goals. So it won't be a very unplanned investment. And if it is a planned investment, that I want something in 5 years, I want something in 15 years, this is the investment I have to make, this is the return I want to get. If you have that kind of clarity, all the market noises and fluctuations which you see daily, that market has gone up, market has gone down, all such kind of things won't bother you, and you will stay invested in the causes where you have planned for the time you have planned. So that's why this is very important. The next part of this introduction chapter is to bust some common myth about investment. First of all, the basic thing which people assume is that stock market is equal to gambling. In reality, investment is about research, risk management and long-term growth. So the assumption is completely wrong. Definitely, there are chances of speculation and gambling in stock market, which is being done by traders and speculators. But if you go by that logic, everything in this world, whether there will be rain or not, who is going to win the lottery, whether A team wins the match or B team, who is going to win the elections, everything can give you options for gambling. So when we talk about stocks where prices are moving up and down almost in a fraction of a second, obviously this kind of opportunity is there for gamblers. But that doesn't mean that in a long term, such kind of fluctuations really persist. Thus, investing is about research, management and long-term growth. It is not gambling. Second, fixed deposit are the safest. This myth is not 100% correct. Fixed deposit, even though being one of the safest option, not the safest option, it still gives you a very low return in terms of wealth growth. So if you say that our inflation is increasing by 5%, my FD is giving 6 or 7%, then fixed deposit is quite good as an investment opportunity, but mostly you will realize that FD returns are either equal to or many times lower than inflation. So if inflation is 8%, 7%, and FD is 3 to 4%, 5%, then in such a case, your money is being eaten by inflation and FD is not helping you. So that's why it could be safest, one of the safest, but it's not the right option for you. Then there is a myth that when I have a lot of money, then only I will start investing, which is also a wrong thing. The problem is that if you start late, there will be less number of years for which the money can get compounded. And we will also look at this in detail later, but this is factually correct that if you start investing early and keep the money for long run, you get more money than investing for less years. So if you see Sensex or Nifty in 2005 and you would have invested since then till 2025, which is 20 years, the return is much higher than what you could have got by investing in 2015 and then keeping the money invested till 2025. So this is one part you really have to understand, the power of compounding, and we will discuss about it later in the further chapters as well. And then one very wrong myth is that investing is only for the rich. This is one of the very incorrect myth. The reality is this: investing, especially in stock market, mutual funds, these are for very common people, very retail investors who can start investing with a very small amount like 500 rupees, 1000 rupees, 5000 rupees per month, or even one time. And very small amount of investment can help you in building substantial wealth over time. So that's the reason investing is not only for the rich. And it's quite fascinating that people don't feel real estate where the investment quantum is quite huge. You have to start in lakhs of rupees. There you feel that middle class and lower middle class and poor person can also and should also have some real estate. But for an investment of such a small quantum, 1000, 5000 rupees, you feel that this is only a thing of rich people. So in the next chapter, we will be discussing basics of personal finance. For this chapter, we are closing it here, and please share your thoughts and comments on this course. And if there is any other course you feel like we should start building those, we will start those courses as well. And if there is any feedback on this particular course, do let them come in our comment section. Thank you very much.